Welcome back. Let's talk about Firstsource. It's been a good quarter for the company and they have gone ahead and raised the FY25 revenue guidance once again. It now stands at 21.8 to 22.3%. We have with us Sanjiv Goenka, the chairman of the company. First, Mr. Goenka, if you could explain what's driving this upgraded revenue guidance. Is it that the organic revenue growth is doing better than what you anticipated 3 months back, or it's that Firstsource acquisition that you did a couple of months back? Has that contribution exceeded your expectations?
So there are 3 different elements to this. One is the Firstsource acquisition is paying off. And our presence in South Africa, thanks to Firstsource, is expanding very rapidly. Second is this has been the 3rd quarter where we've had 3 major wins. And this quarter, we've had a total of $101 million of wins. So that's a fairly significant milestone from a Firstsource perspective. So we've never had this kind of growth. We've never had this kind of wins. We've never had this ratio of wins. And so therefore, the way it's going and the way the RFPs are playing out for Q4 as well, we definitely believe that we should be in line to achieve our revised guidance.
For that, Mr. Goenka, what is the expected Firstsource revenue contribution in FY25? Earlier, we understand it was pegged at close to 5%.
You know, I think Firstsource will be about 5 to 6%. But I think over a period of time, we see Firstsource contributing more and more as we get along.
Okay, what about the overall demand environment now? There is hope that things are picking up. Many of your competitors, companies have called out that FY26 will be better than FY25. Banking is already showing green shoots. So to your mind, what's the setup looking like for FY26? Will it be better than FY25?
Yes.
So what makes you confident about the demand environment that you're witnessing?
You know, this is an exceptional quarter, but we are very optimistic about our ability to now win RFPs. We are expanding. 2 quarters ago, I had said that we are looking at expanding the wallet share of our existing customers. And in 13 of our top existing customers, our wallet share has increased and our revenue increased. So that's a fairly significant step forward, and we see this getting better and better as we go along.
Okay, your margin guidance you've maintained between 11 to 11.5%. Talk to us about what's, what are the margin tailwinds, headwinds? You're maintaining it.
So we will be somewhere between 11 and 11.5. And we are working very hard to improve our margins further. Our gross margins have gone up, but we have invested in a lot of people. So our SG&A expenses are also up. And this is our investment for the future. And now these investments are beginning to pay off. Because we've invested in a marketing team, you're now beginning to see traction in terms of deal wins, revenue gains. I think it's all now beginning to play out.
Mr. Goenka, earlier you were targeting of reaching the $1 billion revenue run rate by Q4 FY26. Given the strong sustained performance, can you achieve this earlier?
We are silently optimistic.
Okay, so silently optimistic about achieving that $1 billion revenue growth guidance, but you're not putting a timeline on that. Thank you very much, Mr. Goenka, for joining. Okay, before that, just wanted a quick word coming in on the financial vertical, because that's the key vertical, for you. Now, there is a likelihood that we're going to see no Fed rate cuts in calendar year 2025. Does that change your assessment of how your financial clients will perform in this year?
So BFSI is not as strong as the other sectors, but it certainly looks better in the coming period as compared to where it is now. But what for us is performing and is likely to perform very well is we expect to see a growth in utilities. We expect to see a large growth in the healthcare segment. And in USA, particularly with the Trump administration, there should be a strong focus on healthcare. And we do expect this sector to have strong tailwinds.
Thank you very much for joining in. That's Firstsource. Optimistic going into Q4 and next year. It's time for a growth go. Thank you, Mr. Goenka, for joining in.